How's it going, guys? It's Forensic Force with Deontay, and I'm back with another video. This is going to be a real brief one because I do have a headache and I do want to get some rest and get some sleep. Um, this is going to mainly talk about Ethusd data range for January. So if you've been rocking with me for a while, you know this is not something new and foreign. I tend to do this every first of the month or first trading day of the month. I look back 20 days, 40 days, and 60 days. I find the highest high and the lowest low within each time bracket. So I find the highest high and the lowest low within 20, highest high and lowest low within 40, highest high and lowest low within 60, and I mark it out, annotate it, and then I'm gonna frame context around it so that I could be either bullish, bearish, or neutral on the pair. So jumping right in, talking about the DXY. As you guys know, we did have NFP yesterday on Friday, and that was not great for USD pairs. At least foreign currencies went long. As we know, if the dollar is down, foreign currencies are up. So DXY seasonally. So this is the most basic way I frame context around the monthly candle or the monthly expansion. What is the monthly candle reaching for? Is it going up or is it going down? The way I do it is I would use this website called charts.equityclock.com. It basically will give us our seasonal tendencies for each month for the year. You can see January is bullish, and we can look at the dollar index and look at the chart. We can see that ultimately it has been trending upwards. We have been accumulating, so we've been trading sideways, and we don't like to trade inside a box. We would like to trade in a trending environment. We don't like to trade in consolidation because how do you trade this? You could scalp, but is it ideal? Probably not. What I'm anticipating is price is probably going to ultimately take out this 20-day low and then potentially go to the 60-day high, test this, retrace it, and come lower, and then take out the liquidity that's resting below these lows. Ultimately, here in the States, because I live in New York, I know economically we are not doing good. Unemployment numbers are high. So if unemployment numbers are high, that means there is a direct correlation to how the government is operating. And if you have a lot of people unemployed, that shows that your country is probably not doing good financially. There's something going on. But all in all, a lot of countries around the globe aren't doing well. But since I live in New York, I'm only going to speak on where I live. We are going to expect some hike rates from the feds this year. So inflation is definitely going to be impacting the markets, especially dollar index. So I would like to see the 20-day low taken out, possibly a test of this 60-day high, retrace, and then come lower. But what I normally like to favor is when we have this tight consolidation and knowing that the market is most likely going to go low, I would normally like to see the higher time frame highs or higher time frame liquidity pools taken out first. So something like this and then lower prices. So I would like to see this liquidity taken out first and then lower prices. Will that happen here in January? We don't know. As of right now, I'm on the sidelines for DXY because we haven't taken the 20-day low and we haven't taken the high for IPTA right now currently. But overall, I am bearish on the dollar. I want to see dollar tumble, but let's see what we get. You can't force price to do what you want it to do. Moving on, we have gold. So we're going to jump right into the gold seasonal chart. So we go from here. So this is not the equity chart. This is another platform that one of my friends had subscribed to and had sent me the charts. As you can see, the website is down here. So I'll zoom in so you guys can see the website. That's the website right here. You'd have to pay to get these charts, but there, like I said, there are other methods of getting it for free. But at a certain rate, I believe they allow you to see a certain amount of charts till they block you and then tell you you have to subscribe and pay to get their charts again. But I believe you can reset your cookies on your web browser and you should be able to get the charts again if they have blocked you off or the cutoff for how many charts they're allowed to give you for free. Reset your browser cookies and it should reset the website as well to allow you to look at the charts. But looking here, you can see on gold, or for a lot of the metals in general, gold, silver, and copper. Gold bullish, silver bullish, copper not so much. Looks like it's consolidating on the seasonal, but then it looks like it's bullish within June, coming June. But for gold, you can see bullish, silver bullish. So going back to the chart and how I frame that, or I gather context and say, okay, why should I be going long on gold for the month? You can see that we recently took out the 20-day high, so we had a little bang right there, and then price quickly displaced lower, retested it again, dropped even lower, and now you can see here we're at a PD array, and most people would look at this and say, oh, that is a bullish order block, which it is. I'll just keep it simple and just put a line here. You see, price now is recently testing that. Could be create a swing low here, potentially. And then see price go higher, maybe. But we do have the 40-day low here. We do have a 20-day low here and a 60-day low here, really close to price. Could we see this ultimately taken out first and then higher prices? Yes, that is a possibility. All in all, I am bullish on gold, but if you want to look at it from where we are currently in price, you can see from this low that we have, so this 20-day low to the 20-day high, right? Or we could actually, because since it broke the 20-day high, we have to adjust our fib to the highest high that we have. You can see within this range, it doesn't have to be perfect. Always, I'm such a perfectionist. You can see right here in this range, this is equilibrium, 50%, right? So that's fair value. The market is going to buy underneath equilibrium, which is a discount. They don't buy in a premium range of the fib. So I'll put a line out just to show you guys it. So go here, here, twice, dash, and then boom. And I just put above this line premium, right? And anything below it is going to be what? Discount. And we know that markets like to buy in a discount and they like to sell in a premium. So we're in a discounted range of this market, essentially. So we can anticipate possibly some bullish price action. I'm bullish on gold in general, but like I said, I would favor the 20-day low taken, 60-day low taken, and then higher prices. Moving on, what do we have next? We got next Nazillion dollar. Okay, so Nazillion dollar, I believe, is bullish immediately for January. So let's go back to equity charts and Zillion. So we do our gold futures. As you can see, look bullish as well on there. But in Zillion dollar, we're bullish right out the gate for the year, and then we look to turn around midway in January. And you can see in the charts that we are at a bullish order block. As you can see, these two down close candles on the daily. You could actually look at this one too. Price comes down, and then potentially might create a swing low here as well, and then run for higher prices to where people are selling. So ultimately, people that are short here have been eating for a while. They're in profit. They're shaking hands. They're jumping up and down. Woohoo! Short, short, short. But we could potentially see the markets turn around and take those shorts, or anybody that has been shorting since, let's say, October, going into November, they could probably get taken out because their stops are probably resting above these highs. But if you look at this range as well, so from this 20-day low to this 20-day high, and I have this marked up as high. Silly me. Typos. We're only human. You can see that we're definitely in the discounted range of the market, as you can see just off the fib. Anything below 50% is discount. Anything above is premium. Oops. It's right there. You can see this dashed line right here from this low to this high. We're below that, so it's discount. Markets are most likely going to be looking to buy. You can see we also tested the 40-day low, which is a significant price point, and you can see there's a reaction here. So do we take the 20-day low and then go higher? Maybe. I do not want you guys to think that just because I drew this fib here to here, oh, it's optimal trade entry, it's 62%, 70.5, 79. Yes, it looks like it's optimal trade entry. Does it mean it's optimal trade entry? Not necessarily, because what if price goes up, comes down, and then goes lower below price? So instead of from here, optimal trade entry, and then it goes up, and then it comes lower. People are going to be upset, But like I said, you need to frame context around your trades. Risk management is definitely important. And don't revenge trade. A lot of people like to revenge trade when they lose trades. Don't do that. Trust me, you'll save a lot of money not revenge trading. But moving on. So obviously, like if we are, bearish on the dollar, we want to see the Nazillion dollar go up, of course. They're inversely correlated. Same thing with gold. US oil, as you can see, we are really up in a premium range of the market. I don't want to draw my fib to show you guys. You guys are going to have to practice that on your own. Take your fib, anchor it from a high point to a low point, break it in half, and you'll see if you're in a premium or your discount range. But you can see that we're definitely in a premium range. Seasonally, we'll look at US oil real quick. Let's see. Oil. Nope. Should be this one. Or it should be this one. There we go. As you can see, crude oil not looking bullish, um, not but looking bullish as well. Brent oil, and then natural gas not looking bullish, looking very bearish for the beginning of the year, for the month. As you can see, we currently went up and tested the 60-day low sensitive price point that the algorithm is remembering. Could we see a swing high form here and then price come lower to take out the 20-day low and the 40-day low? Potentially. So those that have been following me as well know that in December I was bullish down here because of this bullish order block on a daily, and I've been riding this up long term. So it was a great swing trade for me for December, using the same tactics that I'm using here, same methodology, same idea with IPTA. If you go back to my Tradingview history, you'll see that I posted all this for you guys for sure to show you that I was bullish here and why I was bullish for December. So if you look back, let me see. December bullish, and then natural gas is bearish. But you can see why I was bullish. Just framing context, you got to frame context. Moving on, we got USD JPY, so yen. We can see we took out. This is definitely favorable because we took out the 20-day high and the 40-day high. So we took out a higher time frame liquidity pool. And now I'm expecting price to come down, test this, take that, take the 40-day, and then take the 60-day, potentially coming back down to what do we have down here? An efficiency, bullish order block. So I'm favoring lower prices for UJ. Moving on, what do we got next? Probably UCAD. No. Some exotics. Nope. Euro. So you scroll up. I'd even show you guys the seasonal charts for yen. Yen, bullish. You can see that inversely correlated to dollar. So yen is bullish. I'll go back to the chart before I move on. So people are like, oh, you're going too fast. UJ. You can see looking to come lower. We did break a swing high, but if we form a swing low, then we could potentially be looking for higher prices, but I'm still favoring bearish price action for UJ. Euro, before I forget. Euro, seasonal chart, bearish. Not liking this. Because if the dollar is bearish, Euro is bearish, that's a cracking code. One of these has to be bullish. They both can't be bearish at the same time. It's not possible. That's going to be S&T divergent. So that means there's either one pair that's really heavily booked for longs and they can't take no more shorts and it has to go higher, and the other one's going to experience weakness and fall lower. You can see that we haven't taken out the high, the 20-day high, the 20-day low. Neither have we taken out the 40-day low. We haven't tested any significant price points for the 60-day low. So still on the sidelines for this, but I'm still favoring higher prices because the dollar should be dropping and euro should be increasing here. So still going to wait for more confirmation. If you break this 20-day high, then I'll possibly look for a setup to go long on euro. Moving on, we got pound USD. So GBP USD. Go to the seasonal chart so you guys can see that as well. Looks like we're bearish, and then we consolidate, and then towards the end, going into February, we get some bullish price action. I would like to see that play out here. As you can see, from January 3rd, so we're starting here, price took out the 20-day high, looks to test the 40-day high as well, but there is a bearish order block right here that it might potentially look to retrace off of and then come lower and then probably test the 40-day low and then go higher. But overall, I like that we broke the 20-day high. I would like to see us stay above it, and then potentially we find a nice swing opportunity to enter and position ourselves to go long to take out the 40-day high, 60-day high, most likely. Let's see what we got next. We got UCAD. Do I have Canadian somewhere here? I believe I do. Give me 1 second, guys. I'll find it for you. Brent. I do not right now. Swiss. Not looking at Swiss. Pound. There we go. So pound, jumping right into it. You can see it's bearish. Canadian dollar, you can see that it's bearish going into February as well. But short term looks like it spikes up in January, then sells off into February. So going back to UCAD, you can see that if CAD is getting weak, right, for January, that means the dollar should be gaining strength. But like I said, they can't both be moving in the same way. That means there's a crack in code. The algorithm does not like that. These pairs need to be moving inversely. So one needs to be going up, the other one needs to be going down. I would like to see CAD gain strength over the dollar and find lower prices. You can see January 3rd, starting from here, going down. So going down, right? We can see currently we haven't taken out the 40-day high and the 20-day high yet. Looks like we're reaching for the 20-day low. If we take out this 20-day low, I would like to see price respect it and stay below it. But I would favor, instead, like UJ, I would favor price coming up and breaking this and then going short like that. Moving forward, what we got next? Bitcoin. This is the last thing I want to talk about. Yeah, Bitcoin. So the same thing. I don't trade Bitcoin at all. Do I own Bitcoin as an investment? No, I do not. I should. Sooner than later, I will start to invest money into Bitcoin. As of right now, it looks like it's falling off the map, and they're knocking out anybody that's been long since July. As you can see here, just currently in price, you can see that they're knocking out people. Lows here, anybody that was long from September, they're knocked out. Anybody that's probably long in August is probably going to get knocked out as well. But looking at IPTA, we can see that price, move this up, such a perfectionist. Price has taken out the 20-day low. And we'll actually bring this down so you guys can see this. Price from this price point moving forward, price has taken out the 20-day low, right? Hasn't taken out the 20-day high, has taken out the 40-day low. So could we see higher prices from Bitcoin sooner or later? Potentially, yes. But we just need price actions to give us more confirmation to get in long. So as of right now, I would say Bitcoin is still bearish, but don't take my word on it. Don't take my word on anything. It's just my opinion. I hope that you guys are using your own context and using things that I probably taught you as well to come to an analysis to be long or short, or just to be neutral on the pair. It's okay to be neutral on the pair. Sometimes you don't know. And if you don't know, just stay out of it. I'd rather people get into something that they know more about and can frame more context around than getting into a trade that they can't frame context around. If you can't frame context around it, you shouldn't be touching it. But hopefully you guys learned something today. All in all, that's what we currently have in price. Do know that it is the first trading month of the year, so don't expect much. Wait till February so price can really start moving. Investors are really looking to put their money into certain assets. So peace.